Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Really pretty interesting times in the US with the S&P setting a new lifetime high, managing to get above that 3,400 and managing to close above there as well. But really quite interesting if you look at the actual breakdown. Still around 60% of the S&P 500 shares are still in negative territory for the year. Now, obviously, much has been made of the market being driven by the big, sort of market heavyweights, the Apples, the Googles, and Microsofts of this world, and just going to be very interesting to see how this sort of plays through over the next sort of 3 to 6 months. As many of these big tech shares have really come out of COVID lockdown and closed down really much stronger, as markets and economies have really been forced really into the digitalization. And that's really taken a big sort of toll, and really improved the sort of outlook and the sort of capitalization and earning powers of these big high-tech companies. Now, in terms of COVID, the US appears to be sort of at a little bit of a turning point now. New cases are around sort of 40,000 or less per day, which is obviously still a pretty high number, but that's nowhere near the sort of 60, 70,000 they were getting sort of 2 to 3 weeks ago. Obviously, the election getting ever closer in the US now. We've seen the Democrats formally accept Joe Biden as their candidate, and the Republicans have now formally accepted President Donald Trump as their candidate going forward for the November 3rd election. So now really for President Trump to get re-elected, it's going to be very interesting one to see how the economy performs. Certainly if the S&P continues to sort of push on and that US shares do particularly well, he will be sort of claiming credit for that and saying that's of his making, his administration, and that's the reason why the US share market is doing so well. But still the economy is still not doing that great at present. The other interesting fact out there as well is gold. Gold is sort of has been up around sort of $2,000, and that's really potentially on the back of sort of a much weaker dollar. Now, although the administration would never admit that, but obviously a weaker dollar sort of helps US exports, and it'll just be very interesting to see how this sort of plays through. But also as well, what rhetoric comes out in regard to a softer, weaker US dollar. On the back of the resurgence of the global economy, oil is sort of trading pretty well. That's now just pushing above sort of 43 bucks a barrel. Now in Europe, obviously, we've seen a little bit of a sort of a second sort of wave, if you like. Also, as well, interestingly, that a couple of patients have been reinfected with COVID. Now that's going to be very interesting to see how it sort of plays through, and really what was the cause of that, whether it's a much sort of weaker initial sort of infection and now they've sort of recorded, or if in fact they actually didn't really get rid of the virus at all. Because if it is reinfection, then that presents another whole set of issues for the global economy. But still some pretty good news taking place on the sort of vaccines and treatments out there, and they're sort of getting ever closer in sort of late phase 2 trials or even phase 3s. Indeed, there was even some talk out of the US that President Trump might even fast-track the AstraZeneca vaccine. That obviously has its own sort of issues, in terms of, is that political? Yes, it probably certainly is, because if there was a vaccine, then, it certainly would be good for his re-election potential. But also as well, potential implications for the US government as well. If the vaccine wasn't proven, he approves it, and then, you run into sort of other side effects later down the track. A little bit closer to home in Australia, again, seems to be sort of getting on top of the virus. Certainly in sort of New South Wales and Queensland, they appear to be sort of falling in number of cases. Also as well, Victoria, obviously with the closing of that border with New South Wales, that has helped a lot. The lockdown as well, and certainly they seem to be getting on top of the cases out there in Australia. Interesting, the latest data out of Australia as well shows that the Australian economy held up pretty well, and that's sort of partially a result of the fact that the Australian government allowed people to access their super. Now, what some clever people did was obviously pay down mortgages, etc. But what quite a few people did was actually take the money and go out and spend it in the Australian economy, which was obviously good for the economy because that gets spending going, jobs employed, etc., etc. Now here in New Zealand, obviously the big news was that the government extended the lockdown in Auckland level 3 until this Sunday. But potentially the issue could be that Auckland level 2 will only have meetings of 10 people, whereas the rest of the country has meetings of 100 people. And quite how you manage that, I don't know. Because certainly the New Zealand economy is suffering obviously with this latest lockdown and sort of increase in alert levels, and it'll just be interesting to see what happens when the whole country goes back to level 2. Although interestingly, the housing market is holding up pretty well, obviously helped by low interest rates. And again, it will just be interesting to see how that sort of plays through the next sort of 3 to 6 months. But as with global equities, New Zealand share market has really done pretty well. Obviously, some of the sort of tourism shares have obviously suffered with the sort of lockdowns, sort of border closures. But many of the other companies have come back really pretty well from their sort of March 23rd lows. Now, Mercury have a potential a new bond in the marketplace, a green bond. That'll be a fixed 7-year term. Now, while the rate hasn't been set yet, it looks like it's going to be sort of high ones, maybe 1.9, 1.95, something like that. Now, if you are interested in that, call us on 0800 867 323. Now, as always, in this low interest rate environment, there are alternatives out there. And if you're interested in discussing what is available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.